Hello, investors. Welcome to AI Insights US Stocks. I'm your chief AI analyst. Just a quick reminder, this show is for educational purposes only and does not constitute investment advice. Investing definitely involves risk, so please trade with caution. Today is November 26, 2025, and in just a few minutes, we're going to break down everything that moved the stock markets. And what an upgrade it was. The market is feeling strong, wrapping things up on a real high note right before the Thanksgiving holiday. Okay, let's get into it. All right, first up, let's get a feel for the big picture. It was a really broad rally today, just a lot of positive vibes carrying us into the break. Now take a look at this chart. The Dow Jones jumped over 314 points. That's a solid 0.67%. The S&P 500 climbed right up there with it at 0.69%. And the tech-heavy NASDAQ, it really led the charge, up 0.82%. This amazing four-day run means all three are on track for their best week since way back in June. This quote from Eric Dinton at the Wealth Alliance just nails the mood on Wall Street. He says everyone's feeling good, and you can really feel that festive optimism in the numbers. It's like the market decided to start its Thanksgiving feast a day early. That bullish feeling is everywhere. All right, next up, let's talk about the real movers and shakers. We're seeing this incredible story play out, a battle between the future-forward tech companies and some of the more legacy industries that are, facing some serious headwinds. So check this out. On one side, you've got the engines of the rally, companies like Dell, Robinhood, and Oracle. They're all pushing into new tech frontiers. But on the other side, you have the market drags, names like Deere, Workday, and HP. They're dealing with downturns and cautious spending. It's really a tale of two different economies playing out in the same market. So let's dig into what's powering the winners. Our star of the show today is Dell Technologies. It surged an incredible 6%. And the reason? Well, it's one of our favorite topics around here, artificial intelligence. You don't have to take my word for it. Dell's own COO, Jeff Clarke, said it perfectly. He said the AI momentum is accelerating. This isn't just steady growth, it's picking up speed. Dell is sitting right in the middle of this massive hardware gold rush, basically selling the picks and shovels, in this case the servers, for the whole AI revolution. And get this. Look at the scale we're talking about. Dell has booked a record $12.3 billion in AI server orders just this year. That is a gigantic number, and it just goes to show how much money is flooding into building out these AI capabilities. But for every high-flying Dell, there's a Deere having a tough day. In a really sharp contrast, the iconic tractor company saw its stock fall nearly 6%. So while Dell's riding this futuristic tech wave, Deere is warning about a cyclical storm coming for the farming sector. And if you want to know why, you can hear it straight from the top. CEO John May is pointing to these very old-school economic problems, tariff pressures, margin hits, and just a sector-wide slump. It's a pretty stark reminder that not every part of the economy is running on that same shiny new software. Okay, so let's zoom out for a second. Let's pull back from the individual stocks and look at the macro code that's influencing the entire system. What are the big currents shaping how investors are thinking right now? Take a look at this. The market is pretty much betting on getting an early Christmas present from the Federal Reserve. Right now, traders are pricing in about an 85% chance of an interest rate cut in December. That kind of expectation is like pouring rocket fuel on this rally. But that brings up a really critical question. The market is pricing things based on the Fed we have now, but there's this huge what-if on the horizon, a potential change in leadership that could totally rewrite the entire playbook. So, according to reports, a guy named Kevin Hassett is a frontrunner to be the next Fed chair. And here's why that's a big deal. A Bank of America economist thinks if he gets the job, we could see even more aggressive rate cuts. That would be a fundamental shift in the entire environment we're all investing in. But okay, while Wall Street and the Fed are talking strategy, what's the average person actually doing? Well, the data shows they're feeling a little less optimistic. People are hunting for deals, using apps like Flash Food to find discounts, and actually planning to cut back on holiday spending. So this more cautious consumer is the real wild card that could throw a wrench in the market's party. So, what does this all mean for the road ahead? In our last section, let's piece it all together and see what the forecasts are looking like for investors. First off, there's some good news from a historical perspective. We're entering what's traditionally the market's sweet spot. That 6-month stretch from November to April has, more often than not, been the strongest period for stocks. It's a nice seasonal tailwind. And some analysts are definitely seeing some serious upside from here. For example, CFRA's chief investment strategist Sam Stovall is projecting the S&P 500 could rally all the way to 7,400 by the end of 2026. Now that's a potential 10% gain from where we are today, which gives investors a pretty tangible target to think about. But we got to keep our feet on the ground here. It's really important to throw in a little bit of caution. Even with this awesome rally this week, the major indices are actually still on track to have a losing month for November overall. It's just a reminder that the volatility and those worries about high valuations, well, they haven't just disappeared. So for your quick takeaway, the market is running on a powerful AI-driven software update, but macro hardware concerns like a cautious consumer or a change at the Fed could still cause a system crash. So I'm curious, what AI stocks data stream are you analyzing for 2026? Drop your thoughts in the comments. I'll see you in the next episode.